Hey guys, everything new on its on here. Here's some market update. Asian stock markets ended down overnight significantly. Dow futures are down. The Nikkei is down. Was down 918 points, 5.4%. That's a massive drop, biggest drop since 2013. And the pre-market as well. Let's just take a quick look at that, and then I got an article here. Pre-market for the Dow is down 100 points. So I think we're going to see that go down quite a bit today. Let's look at a quick article. This is Zero Hedge here. Global market stunned by biggest Japan crash since 2013. All eyes on Deutsche Bank. So a whole number of things in play here. With China offline for the rest of the week, global markets have found a new Asian boogeyman in the face of Japan, which, as reported last night, saw its markets crash and the yen soar, showing less than 2 weeks after Bank of Japan unveiled NIRP, negative interest rate policy. Yet another central bank has lost control. So the central banks are losing control. Once they go negative, that means this is the last bullet they have in their gun. You can see see the chart there with the Bank of Japan negative interest rates. Nikkei crashed 5.4%. This is what I was speaking of with the Asian markets. The biggest drop since June 2013, dropping over 900 points to August 24 lows, driven by crashing banks, while the yen soared 114.50 overnight before the Bank of Japan desperately tried to push the yen lower, with London dealers reported the Bank of Japan checking rates and levels to prompt short covering through 115. But while the Bank of Japan failed to push up equities, it certainly managed to launch a panic buying spree in JGBs, sorry, which is also reported finally slid in negative territory. Aside from Japan, everyone is looking at the bank, which we first asked if it was the next Lehman last June, namely Deutsche Bank, Germany's Deutsche Bank, to see if yesterday's desperate scramble to publicly confirm it has sufficient liquidity will sufficiently stop this price from dropping, and that CDS draw and blowing out. For now, the stock is indeed up modestly, even if the CDS has refused to tighten, suggesting that whatever management did, it is not enough. It is only a matter of time before selling returns. As a result of temporary stabilization in financials, the Europe 600 index was little changed after closing Monday. Volatility is getting very high. Guillermo Hernandez, Sampier, head of trading at MPPM in Epstein, Germany, told Bloomberg, investors need to increase their cash and be careful in case they see any buying opportunities. A technical rally may easily get sold again. We won't come back to calm waters soon. So further confirmation of general market volatility happening there. With the market already awash in oil, it is very hard to see how oil prices could rise significantly in the short term. In these conditions, the short-term risk to the downside has increased, and oil was down to $30 a barrel on CNBC there. Going back to the story of Japan, if they don't kind of stabilize the situation, this could really draw all the other central banks into a lot of trouble. And the fact that everybody's going negative interest rates, it's only a matter of time before the U.S. does, and the whole Eurozone also goes that way. They're printing money like mad right now, and we're going to see zero interest rates come to effect soon. So pay attention to that, and I think Tuesday, today, is probably going to be there's probably going to be some significant movement on the Dow and then the U.S. markets in response to the Asian markets there. So we'll see what happens, and I'll try and get you an update later on.